everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and September is coming to a close. The evil September, which is normally down, not so much this year. A big up month, and honestly, it's the 6th month in a row of gains for the S&P 500, barring some crazy activity going on Monday and Tuesday for our final 2 days. So let's dive into the earnings calendar to see what's cooking. Honestly, really boring. Only 53 companies reporting earnings this week, so super light. But we do have Carnival Cruise Lines on Monday. Tuesday, there's some bigger names like Nike, Paychex, and Lamb Weston. And then we round things out with Levi's and ConAgra brands. And really, my friends, that is it. A super boring week with regards to earnings, but don't worry. In another couple weeks, we'll have some big names reporting as earnings season kicks off yet again. Now, in the United States, we had a rate cut last week, and of course, there are several other central banks around the world that have been cutting, some staying the same, but it's this race to the bottom with interest rates. Coming up this week, we do have a rate announcement from the Reserve Bank of Australia, one that may be of interest to you because that may be some opportunity for those of you trading the Australian dollar. As you can see here on your screen, we have Tuesday at 12:30 a.m. Eastern Time. That's right after the stroke of midnight. The Reserve Bank of Australia is coming out right now. I'm actually seeing mixed things, actually. Right now, they're at 3.6%. Expectations are overall, they're going to say at 3.6. However, I am seeing some suggestions they're going to drop to 3.35, dropping 25 basis points. So we'll see what happens there on Tuesday. If you are trading the Australian dollar, just know it could be a very volatile currency at that moment in time. Remember, not the most liquid time at that 12:30 in the morning, so be careful with that one. Okay. Jerome Powell has made it very clear that the job situation has been very critical. Of course, last week we had the core PCE numbers, which gave us some inflation insight. We also had GDP. But the jobs is really the interesting one because that's why they cut rates 25 basis points. He really cited, the term he used was a risk management cut to drop those rates just in case that employment data starts to look a little bit worse. Well, the good news is, since it's the first week of October, we start to get some jobs data, and here we go. Quite a bit of jobs data as usual. We have about 5 pieces this week. We start things off early in the week on Tuesday at 10 a.m. Eastern Time. You get the JOLTS job openings. That will start us off. Moving on to Wednesday, you get the next heavy hitter, which is the ADP non-farm employment change. That's Wednesday at 8:15 a.m. Eastern Time. Followed up by the unemployment claims on Thursday at 8:30 a.m. And then the real big number, the one that everyone is watching, is going to be that unemployment rate, which is Friday at 8:30 a.m. Eastern Time. And you also get the non-farm employment change. And remember, last week that non-farm employment change spooked people. Currently, we are sitting at a 4.3% unemployment rate, which is not historically high at all. But if that number starts to continue to tick up, it would further bolster the argument that the Fed needs to cut rates even more at that October meeting. Remember, we have 2 meetings left for this year, October and 1 in December. Right now, the odds are that we're going to get a 25 basis point cut at each one of those meetings. But inflation, growth, and unemployment could derail that at any moment in time, which of course makes it so exciting to be in our world as a trader and an investor because things are constantly changing. So that's your big stuff for the week. Really all about the unemployment numbers on Friday will be the most important piece. That, my friends, is your Monday Morning Must Knows. We'll see you next week.